Good afternoon, my name is Jordan Lambert, Market Analyst at Jalatonga Management. Following this $60 surge after the news that the Fed is set to continue the pace of its asset purchases, gold has been drifting back and forth between 1360 to 1375 as investors assess the new value of the metal. The effects of the node taper decision may be longer lasting on stocks rather than gold, given that inflation is still low and Syria tensions have eased. On the contrary, gold could be given another boost shortly as the next US debt ceiling battle is almost upon us, and this is likely to create uncertainty and hurt the dollar. Therefore, there still is a very strong case to be holding gold in the medium term. Another strong jobless claims number, recording a 6-year low, and a huge jump in manufacturing activity in the Philadelphia region yesterday prevented gold from making new highs. It prevented it from pushing higher, and as I speak the market is looking a little toppy and it is probably due a reversal. Let's just take a look at the chart. Looking at the 4-hour chart, and I basically still have my analysis from yesterday. We can see this blue diagonal line is a medium-term bearish trend line, and yes, we've had a few false breaks of this line, but the important thing is the market keeps closing back underneath this bearish trend line, so it shows that it's still having an impact on price. We also have the Fibonacci levels. The 61.8% retracement is having an impact, forcing price down every time it tries to make its way up to the mid 1370s. This level here is forcing it back down. And also another form of resistance I mentioned is at 1368. On the 11th of September, this was a level that saw a high amount of selling and forced the market down, and we can see that this is still intact, even though again we've had a few false breaks. So we've got various forms of resistance. We've got fib resistances, trendline resistances, and we've got a form of resistance at 1368. Let me just zoom in. Since I did my yesterday report, we've had quite a few long shadowed candlesticks that you could maybe interpret as shooting stars, 1, possibly 2, but the latest completed candlestick here is this red one, which is quite a bearish one. We just need now to make new lows and go below 1358 here. Because this is short-term support. If it can go lower than 1358, 59, we could see that reversal, because a reversal is looking probable. There is little economic news due out today that could impact gold. Therefore, the technicals could take control with an absence of any fundamental impacts. So yeah, just be aware of that. Thank you very much for listening to me. Have a nice weekend, and I will speak to you again on Monday.